Hey guys, welcome back. In today's video, we are talking about the 90% retail dark pool, shorts facing losses, the Monday squeeze, and many more in this video. First, we're taking a look at this. Best Q1 to date since Q1 of 2020. While market cap is on par with Q3 of 2020, when box office was close to zero due to COVID and AMC was considered bound for bankruptcy. Makes sense? So we're taking a look at the market cap for AMC, and we are matching our time to the 31st of August of 2020, which we all knew what happened then and what AMC was facing. And right now, whilst our Q1 is the best in the last 5 years, what we are looking at is how we are closing in towards that price again. Now, we all know what happened afterwards. You can obviously see from this spike. So we know that this is only going to happen again. But so far, when we talk about just the real value of AMC, do you think we should be at a time where whilst we are more efficient as a company, we've paid off more debt, we are operating extremely well, should we be at the same market cap as when we had no business whatsoever? And again, the answer is obviously very obvious. And then you add on to other factors like constant people that are buying. There are more investors in AMC now than there were back then. Not to mention the institutions who also want to buy AMC. But of course, we are being suppressed because of the billions of synthetic shares that exist out there. So once again, this is just me saying that firstly, we should already know from this that we are extremely undervalued. When you just take a look at the fundamentals and you talk about if we were to see real price discovery, do I believe that AMC should be 10 times, 100 times, or at the very least, nowhere near where we are right now, then I completely, that's me on yes. And when we talk about, do I believe that afterwards, when we are able to get real price discovery, when all the illiquidity problem does happen, are we going to see the same spike in market cap like we did before? I also think yes on that. But the only thing is, I think our spike is obviously going to go way higher because there are so much more synthetic shares that have been created since then. Now, another big thing is that today we are seeing 64 million plus volume for AMC, with the latest report shows 76% of total volume of exchange. Now, the stock was up 10% and we ended the day off around 6.52, and no news explains the volume nor price spike. Speculation could be Ryan Cohen buying shares or AMC doing offering. Regardless, all shorted shares post December 15th would be facing losses above 2.11 own those shorts. So let's talk about multiple things first. Firstly, again, we saw the volume come in today for AMC. We saw AMC up 6.52%. Bear in mind, this is AMC up 6.52% despite the massive use in dark pool, which we'll talk about later on. And then as we go up towards the top, as we go closer in terms of kind of 10% territory, we start to see that pressure come in again. We start to see AMC price being pushed down. Now, the rumor is, of course, that speculation, whether it's Ryan Cohen buying personally or what we talked about with GME buying AMC, people are suspecting that large volume of coming in because of things like this. Now, there's also another thing to back this up, and in terms of what could be happening this coming Monday. So make sure we listen to that as well. But right now that it could be something that is major. We already know that multiple institutions want to buy AMC anyway. We already know that perhaps there is a massive merger going on with GME and AMC. And we talked about AMC on its own as well. Why people would want and see that AMC is, of course, a good opportunity. And bear in mind is that a big reason why we are facing suppression, even with the fact that AMC went up 10%, is that firstly, today was a day where majority of the stocks were going down. We saw Palantir actually drop over 10%. And so in times like this, where we're seeing these massive stocks going down in value, losing hundreds of billions, trillions of dollars, those are collaterals going down. And so they are worried about keeping AMC. They're worried about the fact that if AMC is not falling along with the rest of the market, then their whole position is just going to get a lot worse. So that's why they were worried and can't afford to go to 211. So firstly, the fact that it was moving up on 77% off exchange. Imagine one day without dark pools. Now I want to go more into that, but already we can talk about this fact is that we faced this much volume and this was only at 10 a.m. So think about how much AMC would have gone higher had we not seen the dark pool. yesterday we saw 54 million shares traded and 81% never hit the NYSE. And you can see today's volume was only bigger. It was close to 70 million in volume. And this is what we talked about with how these days where we're getting so much volume, especially recently, if we weren't seeing an 80, 70% dark pool, if we were seeing the market standard 20, 30 or lower, AMC will be having 10, 15% days pretty much every single day until it reaches a sensible price. But it's because we're faced like this, and I'm going to show you this, pages and pages showing daily 70% plus dark pool off exchange on AMC. So you can look at it right here, and this is something I've shown in the past before, but this is just to really showcase. Now, you compare this with any other stocks, and you already start to see how crazy this is. Now, just from a quick glimpse of this, what we're looking at is 54.89% to be the lowest percent. Now, that is, when you compare it to some other stocks, still relatively high. Not to mention, this is the lowest for AMC. And the very fact that we are typically right now looking at 70 to 80% with the 30-day average at 70%. So you obviously know how ridiculous that is. Now, one of the things I talked about at the start of the video is 90% retail dark pool. And so far, we've only seen 70%, we've seen 81%. Where does the 90% come from? Well, if you take a look at this, up over 9% with 90% of retail trades routed to ATS. So what we're looking at is the flows captured in dark pool by trader size. And this is something we've shown in the past before in yesterday's video as well. What you will see is that for retail, 90.1% of the trades that are took are being routed into the dark pool. Whereas for professional, you're seeing a 56.3%. And for institutional, we're looking at 100%. So this is what we're looking at. And it's why we talked about with, despite the fact that had we not seen, a 77% of exchange today and even higher, we would be looking at AMC going up a lot higher than where we are today. Because firstly, the majority of the volume would, and kind of the sentiment, the momentum would be bought in by retail. However, retail doesn't have any effect on this stock. And that's the ridiculous part, because AMC, we already know, is a retail owned stock. Yet retails don't have any ability to affect the price whatsoever, no matter how much money you put in, because you can put in $100 million into AMC as a collective of retail, and only 10 million of that will have an effect on price. Institutional can buy 12 million worth of AMC or sell 12 million worth of AMC, and they will have a bigger impact than you. So you can see how ridiculous that is. And this is why we've said that today is already a showcase that it's institutional buying. It's talking about how attractive AMC is to these institutions, but also to talk about why we should be looking at an even bigger day for AMC and why they're worried about retail the most, because they know that this is what we talked about with how if retail were to bring AMC above $2.11, these guys will start losing tons of money. The very fact that SEC actually have assessed on this, you can see from here that SEC can fully enforce this rule at any time for a period of up to 12 months if deemed beneficial to retail investors. Now, what this rule is that this rule allows the SEC to effectively ban, halt, limit, restrict, or revoke access entirely to any alternative trading systems and or dark pools that connect to the exchange. So firstly, they have the ability to do this. We just talked about here, ban, halt, limit, restrict, or revoke. And also they said that if deemed beneficial to retail investors, going back to here, right now for dark pools, we didn't see institutional use it whatsoever, at least in terms of this chart. We saw professional only using it for 43.7%, bearing in mind that dark pool was something that was made for institutions to use, because we as the retail, we don't have manual access. We are not choosing and opting in for dark pool. And yet the highest you see is 90.1% for retail. And they say that they will do this if it's beneficial to retail investors, yet they turn a blind eye whenever we talk about this. So this is just talking about the manipulation that's obviously happening and why we've said that shorts don't want us to bring it up. When you take a look at this, AMC at 1.48 per share equals 707 million market cap. around 350 million cash, net property assets 1.4 billion. These two alone exceed the market cap by 100%. Conclusion, AMC underpriced. Forecast, likely Moas as opponents are screwed. Now, of course, there is a lot more to this as well because you gotta include the debt as well. But when we talk about that, there is still so much other factors as well. I don't want to talk about this blindly in terms of looking at their property assets and then their cash and then not talk about their debt, because when you are looking at papers, when you are talking about kind of the evaluation, that those are things that you should be looking at. But of course, then there are also things at how is this company operating? What is this company's kind of plan for the future? Those are also things you're looking at. And we know how AMC is planned. We know how AMC is operating, and is why I say and believe that they are greatly underpriced. Another thing, and I think that this is a major thing, is that Michael Burry expects GameStop stock to pop on or by Monday if Ryan Cohen does in fact announce a merger on Monday, where someone messaged him and he replied this, what I meant was that if/when there is a merger Monday, the stock needs to pop if it has not already. The higher the pop, the better for GameStop. Now, this is something that could be extremely big. And the reason why I say this is because we still have no idea in terms of the plans of actions Ryan Cohen wants to take. We know he wants to look at acquisitions. It could be a multiple firm acquisitions, but we have no clue to the exact details of what's going on. Now, what we do know is, of course, firstly, the acquisitions. What we also know is Michael Burry's take on GME, how he believes GME can reach $100 billion in market cap. Furthermore, about what he's talked about in the past before with the synthetic shares and the understanding of naked shorting and how he could squeeze these naked shorts along with gamma squeezes and short squeezes. And so when he is suggesting to talk about the pop after talking about big news on GME, I do believe that something could be happening. We're also looking at Bank of America now increasing their GME position. Now, this is what we've said with the fact that we're seeing now, firstly, the rumors between Ryan Cohen, potentially GME, buying shares of AMC, the acquisition/merger. We're looking at how institutions are trying to buy as much AMC as possible. We're looking at Michael Burry hinting at the merger potential Monday. We're looking at the Bank of America, institutions buying GME. You start to see how all of these things are linked together. And so it's why I believe that there's a big likelihood that everything right now is circling around AMC and GME, and that this acquisition could be a multiple firm acquisition, but it still is involving AMC. And that's why people are trying to expand their exposure as much as possible because they know what's to come. Now, when you look at the other side, Bitcoin falls under $72,000. So for the crypto market, we are seeing billions and billions of dollars rotating out of the industry. However, we're also seeing potential target of going to 38,000, so even more capital moving away. Now, this isn't to say that, I think crypto is a bad investment, but I wanted to make the points that we know about how in the past we've seen crypto being used as collateral. So we're already seeing how one side of the collateral is failing. Another thing is HIMC. Now, on one hand, the manipulation is frustrating, but on the other hand, it's a blessing when you know what is coming. Because firstly, we're still seeing the volatility in silver. So we know that right now the demand is there. But we also know that the reason why we're not seeing it go up is because of the manipulation by the banks. Because when you take a look at this, it's only the 3rd of February, and silver physical deliveries issued and accepted at COMEX are already about to cross 3,000 contracts. And so this is just showing the demand for silver. Now, under normal circumstances, the demand would dictate that the price to go up. And we're seeing that with the volatility, it goes down. And when you talk about how much exposure these banks had towards the short side of these silver prices, that's why we know the manipulation is going on. And this isn't to say that it should just be all straight up for silver. We obviously are looking at pullbacks, but the very fact that in the Shanghai exchange for the silver, we're still seeing it above $100. We're still seeing the premium being there. I believe that there's a lot more room to go. And then finally, when you take a look at what's happening with the Japanese yen, another big thing for why I think a market crash is about to happen, or we're looking at the valuation of these stocks going down. And this is what I think is playing a big part to why we're seeing stocks like Nvidia falling, why we're seeing stocks like Palantir falling, and why they are afraid of AMC right now when AMC is able to go up while the rest of the market is down. As always, none of this is financial advice, so do take what I say going to do your own due diligence and research, and I'll catch you guys next time.